Hey guys, hopefully everyone is doing well. Today's target is to see and solve question number 6.6. The chapter which we are related with is Interest and Bond Valuation, Managerial Finance by Lawrence Gitman. 6.6, we have already solved 5 questions and we are trying to understand relationship between three major aspects related to interest and bond valuation. First, we have seen nominal rate of interest. Then we have seen real rate of interest and we discussed inflation rate. Nominal rate, when you have invested your amount in any investment organization or security bearing company, you have invested your amount over there and you are getting a rate of return. Like 1 lakh rupees were deposited in Qawmi Bachat, just giving you an example, and you are receiving 15% as your rate of return. But in Pakistan, especially, or in Asian countries, we do understand that inflation rate is very high. And let's say the rate of inflation is 5%. So please try to understand, if you are getting 15% from your investment organization and inflation rate is suppose 5%. So actually what you are getting is not 15%, because at one side if you are getting 15%, at other side you are losing 5% as well due to inflation rate. In other meaning, the product which you were able to buy for by if you were able to buy a product for rupees 100, but due to this inflation rate now you can buy it for 105. Inflation is what? Original price of any product was 100 and currently you will be able to buy that product for 105. This is what we are understanding inflation rate. Inflation means increase in prices. So here the original price of that product in previous period of time was 100 and now you will be able to buy the same product for rupees 105. So in the similar way, if you are getting 15% more, but on the other hand, you have to spend 5% more for the same product. It means on the other hand, you are losing your 5% income from this nominal rate. So what real rate of interest would be? You will choose your nominal rate and will subtract the percentage you have lost. So nominal rate minus inflation percentage, you will get real rate of interest. So this is what we have discussed. Please note it down. Nominal rate does not mean that actually you are receiving the same rate of return. We'll have to follow other factors as well, and that is inflation. So you will have to subtract the rate of inflation from nominal rate to get your real rate of interest. So this is what we have studied in previous 5 questions. It's not a complicated sort of problem. Again, 6.6 is a simple problem where we are willing to create a relationship between nominal, real, and inflation. So let's get back to the question. Again, as usual, we do have a firm wishing to evaluate interest rate behavior has gathered the data. So this is particularly to related to a firm, and it's their personal research work for gathering that data related to US Treasury securities. If in Asia, if you want to understand what is this US Treasury securities, in Pakistan we have Qawmi Bachat, National Saving. It's a sort of investment company where you will keep your amount and government will provide you a proper rate of return upon that. In the similar way, US Treasury security means citizens of United States will put their amounts in this treasury and government will be responsible to provide rate of return. Just like in saving banks, you put your amount and get rate of return. In the similar way, you You can put your amount in US Treasury securities and you will get your rate of return. So for the timing, just consider it as a bank, each having different maturity, each measured at a different point in time or period. Assume that the risk that future interest rate movement will affect longer maturities more than shorter maturity is zero. All right. So we are not concerned with it because we don't have to calculate it. Please understand that he is talking about interest rates. And since interest rates are already given in your question, look, this column is presenting the rate of interest. It has already been given. We don't need to calculate. So you can ignore whatever is written inside this bracket. There is no maturity risk. It means in our assumption, it has also been supposed that at maturity, the amount you will get after maturity will not have any risk. That means same amount you will be able to get. These data are summarized. These data or this data, even this is US publisher. The data is summarized in the following table. All right, guys. So we have this data and several inputs are present. First point in time, the time period, maturity. That means if you have purchased any security on January 7, after 2 years it would be matured and you will be able to get your original amount, as well as your interest would be paid between 2 years or at the time of maturity. This is nominal rate of interest, the rate of interest which is promised by treasury security. Inflation expectation is 9.5% within 2 years, and in 10-year inflation would be 8.2%, 6 months 10%. So different rate of inflation is provided over here. Let's proceed next. Using preceding data, find the real rate of interest. All right, this is what we have already discussed. And to solve it, let's start our A part. There would we would be in need to put time and okay, instead of time and maturity separately, we can write time maturity in the same column. Then we must have, actually let's see what is requirement in a real rate of interest. So here you will write your nominal rate and it would be in percentage. Then you will see your inflation rate again in percentage, and finally you will get your real rate of return, and this real rate of return would also be given in terms of percentage, or we will calculate it in terms of percentage. Little more space is needed. Alright guys, so this is what we will use the number of columns to calculate our real rate of interest. Requirement, please read it again. We need to calculate real rate of interest. Let's turn it as well. Time of maturity. First requirement does not require any particular time period. It has been said at each point in time. So it means from here to here, all of calculations would be used to 10. First time and maturity is 2 years, then I think 10 years, yes, then 6 months and 20 years, 6 months, then we have 20 years, and after that we have 5 years. Right, so we need to make them align. Now nominal rate is also given in your question. First 12.6, 11.2, 12.6%, 11.2%, then 1311, 13, 11, and finally we have 11.4. So we have also presented our nominal rate of interest. Let's align them. And next we will be looking forward for inflation rates. Why we are writing it again? Because a real rate would be calculated only if we will have inflation and nominal rates. So inflation expectations is 9.5 and 8.2. 9.5, 8.2, and then we have 10, 8, 8, 10, 8 and 8, but this 8 is 1 and 3, 8.1 and 8.3. So we have arranged our data accordingly. Let's align this inflation rate as well. Okay guys, now let me know how to calculate this real rate of return. As you know that rate which you are receiving from treasury security is 12.6, but inflation rate is 9.5. So obviously real rate would be less than nominal rate because of this inflation. So actually you are doing nominal rate subtracting inflation rate, with which you will get your real rate of return. Let's see if it can wrap. No, that is just really disturbing. This Excel is not actually Microsoft Excel, that is why it irritates. So guys, finally we are at stage to calculate our real rate of return. How? You will subtract this inflation rate from nominal rate. First rate was 12.6 and you have to write it 12.6, and you will subtract interest rate 9.5. So we have got 3.1 real rate. Look how different it is. Actually you are receiving 12.6 from treasury, but due to inflation the real rate is only 3.1 in return on your investment. Second nominal rate was 11.2 and you will subtract inflation rate 8.2, and for third you have 13 as your nominal rate and you will subtract inflation rate. You have got 3 again, and next is 11 and you will subtract inflation rate. Finally we have 11.4 and you will subtract 8.3 as your inflation rate. One second. 11.4 D40, it should, what is this? It is not behaving accurately. 11.4 minus D40. Okay, we can write it manually. 8.4. Okay, it is coming in percentage. Let's see if we can change it. It is little strange why it is coming in percentage. Yes, percentage was selected, so we will now change it. So we have got our point. This is the rate, actually not percentage. So finally you have got your answers, and these were required in part A and it has been sorted out. Just for your understanding, please keep it in mind, when you want to calculate your real rate you will have to subtract inflation rate from nominal rate, with which you will be able to calculate your real rate of return. A part is sorted out. Describe the behavior of real rate of interest. What forces might be responsible for such behavior? Okay, you can see that in 10 years, the real rate is 3.1 in 2 years, and in 10 year it's 3 in 6 months, same 3, 20 years 2.9, and 5 years it is 3. So overall you can see there is not a huge change, but nominal rate again not a huge change, but inflation you can see that it is going down and again coming up, again going down, again coming up. So inflation rate is disturbing. In part B, we are supposed to see why these rates are changed. First, we can say economical conditions of country. Then we can say the political stability is also a key factor. Then financial institution control can also be a factor with which sometimes uh, your inflation rate and nominal rate would be disturbed due to financial institutions control. How? Let's say State Bank in Pakistan is controlling situation, and they have urged to, or they have forced to decrease the rate of interest. So nothing else you can do. You will have to follow the instructions of State Bank, so interest rate can be dropped. So this inflation can be directly related with economical conditions. And finally, one more factor you can add, and that is market forces. Sometimes due to excessive demand of the product, inflation would be increased. Look from here, 8.2 to 10. Inflation is increasing due to market forces. So market forces mean how much demand of product is present and how much supply of that product is present. So inflation can directly be associated with market forces as well. So these are some of the factors with which your inflation rate, nominal rate can be disturbed. No doubt there are number of other factors as well. So for the time being, just consider these four. At C part, you need to draw yield curve associated with these data. These data means every aspect you will have to consider. So point in time, maturity, nominal rate and inflation rate, and we will also be presenting, let's see what is said, associated with these data. Okay, if you will present every element present in this data, that would be included in your graph C part. And for graph, let's see time. First we will see the timing. 2 year, 6 months is minimum and maximum 20 years. So let's choose x-axis first. How many points we do have? 1 2 3 4 5 6 7. So up till 7 we can choose, and let's divide our data into particular parts. This is our x-axis, and right now we will see how to put our y-axis. On x-axis you will be putting your time period, time or maturity would be presented over here. Since we want to present 20, so let's take 4 years, and then we have 8 years, 12, 16 and 20. As you know that maximum 20 is needed, so our x-axis is completed. Over here you will be writing your inflation percentage then you can write your real rate percentage. In this way, every aspect we can understand, and you can have your nominal rate percentage. So all these percentages would be considered, and with which we will be able to understand their behavior. So maximum number which is over here is 12.6, no, 13. Maximum number is 13 and minimum number is 2.9. So if we have 13 lines, then we can use our table for 1. So 1, 2, 3, 4, 5, 6, 7, 8. No, it means table of 2 we will choose. 2, 4, 6. What is this behavior? 2, 4, 6, and then we have 8, 10, 12, 14. Alright guys, now 13 would also be presented. Why I have chosen this table? I am very sure that you have already in your mind that distance, physical distance from one point to another point should always be equal. And here Excel is helping us, distance is already equal. Second factor, numerical distance should also be equal. Here you can see the distance is 4, difference is 4, 4, 4, 4. So distances are also equal, and here physical distance is little more disturbing, and we have actually made this distance because of this inflation rate, and for the time being we can adjust this distance as well, so that you can understand that physical distance should also be equal. So now we have made it equal. Later on we can adjust upper part as well. Let's start. First we will present inflation rate. So for inflation rate, let's insert a point to mark different relationships. Alright, so first point we have got. Let's read out. This is your inflation rate, and as I was saying that it would be disturbed, and we will see it later on. Inflation rate for 2 years. Okay, for 2 year inflation rate is 9.5. In between 0 and 4 it would be 2 year, and we need to put at 9.5. In between 8 and 10 would be 9.5. So just under 10 we will get it. Now let's see what second point is saying. We will go to 10 year first. 10 would be after 8 but before 12. 8, 9 and 10. Okay, we have got. So for 10 year inflation rate is 8.2. This is 8, and 8.2 would be little up. So we have got it. Now next point we will see, it is for 6 months. Let's come over here. For 6 months inflation rate is 10%. So get back. 10 would be over here. For 6 months it would be just beside, and exactly 10% would be over here. So we have got our point. Let's see what is next. For 20 years it is 8.1. 20 is here, and 8.1 we want to go just above than 8. We have our last point. For 5 year it is 8.3. 5 years would be after 4 but before 8. 4, 5. And how much for 5 years? It is 8.3. Yes, so it would be 8.3. So finally, we have got our inflation. It's time to first let's copy one point. Normally it does not appear. Put it sideways. Now we need to join these points to present. Line would be chosen, and first line from here to here, and second line we are joining from this point second, and your third point. Okay, and now we will be looking for our next point. Third point would join over here with 4 point. Right now you can see the behavior of this inflation. As you are increasing your time period, inflation is having a slight downward slope. So our curve is completed, but here a little more adjustment is needed. So guys, you can understand the behavior of this inflation. Blue, we have considered inflation rate. This is our first curve, and why not to make it blue as well so that it can match. Next curve, we will be looking forward for inflation has been completed. Real rate of interest would be considered. For that, let's change its color, and we will use a different color, say red, for real rate. Let's get back. For 2 years, real rate is 3.1 for 2 years. 2 years is just over here, and you need to put at 3.1. 3 would be above than 2, but less than 4. Here you may have 3 and 3.1 little up. So first point has been nominated. For second 10 years, we will go 10 just over here. For 10 years, rate is 3, and just down of first point. Next point is for 6 months. Here you will have your 6 months, and it is 3. So 3 would be just at this point, and let's choose our next point. For that, we will go to 20 years first. This is 20 years, and 2.9. It would be just the same line. And for the next point, let's choose 5 years. This would be 5 years, and for that just go to 3, and as usual 3 would be in between these points. So guys, we have completed our structure. Let's use to join them, and we will make this red line so that we can distinguish it. Join our first point with second point, and now please understand it's not a straight line. That is why we will have to join every 2 point separately. So in this way, final joining is in progress. So guys, you can understand that it's a slight downward sloping. Inflation rate has a clear downward slope, but real rate, this is your real rate percentage, and you can see that your real rate is having downward sloping as well, but with a slighter proportion. Inflation rate has higher downward proportion. Real rate has downward proportion, but with the slowest or the lowest proportion. Two elements are presented: inflation rate percentage, and beside this real rate is also presented. And now we are going to present our nominal rate. For that we need a point, and I am not hopeful that we will get this dot. No, not getting that point. All right, then what to do? Okay, we will use forceful. We have got it. Now let's arrange it again. Actually, we were willing to copy that dot, and this line was not aligned, permitting us. Okay, so next is to put our nominal rate. Inflation rate and real rate has already been put. For that, what color we should choose, which is opposite green color, I think would be better. And this green color, we have got it. Now let's get back to the table. For 2 years, our nominal rate is 12.6 for 2 years. Go to 2 years, which is exactly in between 0 and 4, and you need 12.6. It is 12, and 12.6 would be little up. First point mentioned. For second point, go to 10 years. 10 years would be just more than 8 and less than 12 is 10, and you need to put 11.2. 11 would be here in between 10 and 12, that is 11, and 11.2 just above. So second point is mentioned. Now for third point, we need to go at 6 months. 6 months exactly over here, and you need to go for 13%. This is 12, and 13 would be in between 12 and 14. So now we will be looking forward for next point. After 6 months, we need to go to 20 years. At the end, we do have 20 years, and how much percentage? 11%. This would be in between 10 and 12. Last 5 years, choose 5 years would be present over here, and for 5 years we need to go at 11.4. This would be 11 in between 10 and 12, and just up we will get the point. So guys, we have got our points at this point, and now we will start joining these points. Let's change its color as well. We need to put it green. So point number 1 is here, point 2 is here, starts their journey of joining each other. Okay, third point, and join the 4 point. Finally, second last and last point would be joined. Okay, so you can understand the behavior of all three. It's really good to see everything on single graph. Last was nominal rate percentage, and you can now easily understand the behavior of all three is almost similar. All three graphs are having downward sloping. What you will understand with this downward sloping, the first impact, let's see if it is required in question, are describe the yielding curve in part C, explain general expectations. So we have drawn the graph and we are now at point D, where we will describe what the behavior of these elements are. First, you can understand the slope, slight negatively sloped curves. Here what you have understood, slightly negatively sloped. That means it is coming from upward to downward. Upward to downward. But when you will see shorter term, within shorter term, all rates are dropping at the rate which is more than the drop rate for longer period of time. Look over here, from 5 years to 20 years it is dropping, but with slight rate or lower rate. But in shorter term period of time, within 4 years, you can see nominal rate has been dropped, inflation rate has been dropped, and even real rate is also being dropped slightly. So it means all three curves have negatively sloped, and the next lesson we are learning is in shorter period, rate of declining is more than the rate of rate decreasing in longer period of time. I'm again telling you what I have said. Look, just first 3 points. Slope is negative at higher rate, and slope from 5 years to 20 years, it is negative, but the rate is far less. What we have understood, that in shorter period of time, all rates, nominal, inflation, real rates are dropping at higher rate, and these three rates are dropping from 5 years to 20 years as well, but with the lower rate. So this is what we have discussed over here. Number D point was saying result yield curve explain general expectations. So we have understood that if you will have your fund for longer period of time, your nominal rate, inflation rate, and real rate will not be dropped. Please understand, will not be dropped as much as these rates would be dropped in shorter period of time. In shorter period, rates are dropping at the rate more than the rate has been dropped in longer period of time. This is our D part has been completed. Let's review our question. We have started from here. First, real rate of interest was required, and we have calculated this real rate of interest, and we were saying to arrange it, and just 2 seconds we will arrange it. So we have got our real rate of return by subtracting inflation rate from nominal rate. A part was solved, describe behavior of interest, and you can see that there are several factors with effect of which these rates can be changed. For example, if political stability is not present in our country, inflation rate would be increased. And if it is a politically stable country, your inflation rate would be stable. But here you can see that sometime it is dropping, sometime it is increasing. One of the factor is political stability, but we have discussed there are several other factors as well. Yield curve was asked, and we have made all three rates present in our data and in our answer. All three curves were made, and we have drawn them upon a graph. This was C point and describe the yield, the curve. The curves are showing us that rate of inflation or nominal rate or real rate are dropping in shorter period of time with higher rate, and all these rates are dropping in longer period of time as well, but with a lower rate. So in this way, review has been completed. Question 6.6 is completed. Still, we are in the stage of learning several concepts, especially nominal rate, real rate, and inflation rate we have discussed. Solution is in front of you, but even then I am offering you, if you have any difficulty of understanding, you can put your queries through, you can ask your question through messages, text, or you can directly contact me as well for your queries. I'm making sure you that your queries would be answered instantly. 6.6 is completed, and we will be meeting soon again for solution of any other question in future, inshallah. Up till then, please take care of yourself, and please pray for me as well, and a humble request to repeat this question by yourself as well. Thank you very much for your time. It's time to say goodbye. Allah Hafiz.